So let's go this line by line. What's very important is the principal business activity. What do you do? Well, in this case, it's a food restaurant. What product? In here we put restaurant, but in reality, you want to put what it is: Italian restaurant, Mexican restaurant, Indian restaurant, whatever that is. The business code for restaurants, it's this. You usually find that in instructions for the U.S. Partnership Income 1065 have a listing of all the different codes. This is equals to your NAICS code. You see that a lot, popping up. You need, of course, your employee identification number. When you started the business, this one started very promptly on 1/1, and then your assets. Now, this amount is going to come up from another page from the 1065, so I'm just going to ignore it for now. On the top, you will notice this: calendar year 2019 or tax beginning. This part is for fiscal years. A fiscal year can have a different beginning and ending. And those are very rare in partnerships because most partnerships require that you use the shareholders or the partners' tax year. And individuals are all calendar years, right? So the only time you're going to have something in this area on a partnership, it usually is going to be the initial return when you start in the middle of the year. So this can have, for example, February 2nd, 2019 to 12/31/2019. That will be the only time that you'll see a short year being specified here because that's when you started the partnership. So in this case, it's not there because they say it started around on 1/1, so it's the entire year. So there's no need to specify anything else. Applicable boxes: initial return or final return. That's also, this is how you terminate your partnership with the IRS. This is it. I'm no longer, we're closing it. Eventually, if for some reason you change the name, you just indicate that you change the name. You indicate you're making an address change. This is very important because a lot of people do move businesses and forget to let the IRS know that they have a different address. And if for some reason the IRS sends notices to you to the old address and you don't get them, if you did notify the IRS of a new address, guess who's at fault? It's not the IRS because they didn't deliver a letter to you. It's you because you didn't tell them that you're no longer there. And if those letters are time sensitive, penalties may be involved. So it is imperative that you always keep your current address with the IRS. In the event that you discover an error and you need to change your partnership return, all you need to do is mark the number 5, amended return. I'm just making an amendment. Then you can put a statement as to why is it that you're amending it. We found some income that was misclassified, or we found expenses that were not entered, or some duplicate checks, etc. Whatever the situation might be, you just need to know. The next box is your accounting method. For most purposes and most people, it's going to be cash. Individuals are all cash, and since most of the return is mostly comprised of individuals, most partnerships. Now, there are exceptions to the rules. There's always a few that are accrual, and I believe in the class yesterday, Sergio told you the difference between cash and accrual, so I'm not going to go into detail. That's just so you specify the tax. And he also mentioned something about a hybrid. He mentioned the difference between, when you have a combination of a cash and accrual, that will be a 3 on the other, and then you will specify what is it that you have. The number of Schedule K1s, this one tells you there's only 2 people involved. And then if Schedule C and M3 are attached, you collect this box. This box, you are very rarely going to use it because the requirement to file in Schedule M3 is actually, you need to have, let me see, I'll tell you what they are. You need to have certain criteria. The criteria is this: your assets are equal to $10 million or more, or your receipts for the tax year is equal to 35 million or more. So honestly, I don't have a single client that would fall there. So I have never checked that box. I never use that. The next part, aggregate section 45 at risk purposes or grouped. This, again, usually don't check at all because normally you are part of another partnership. This partnership is part of another partnership. And again, very rarely will you ever have those situations. So we move on. Gross receipts from sales, well, that comes straight from the profit and loss statement. See, 254, 592, 254, whoops, wrong one. 254, 592. Your cost of goods sold come from Form 1125A, which is attached to this return. And 24, I'm going to go scroll to it, is here. I'm going to scroll to the form. As soon as I find it, I should have. Where are you? Here we go. Cost of goods sold. That's the Form 1125A. And this information, again, comes from your profit and loss statement. So we got 4189 on merchant fees of 3,450. Those two components make your cost of goods sold. Inventory, beginning inventory. If you are in a cash basis, you don't have inventory. And you don't have ending inventory for that matter. But if you're in accrual, you do. So you need to pay attention to make sure that you know what kind of accounting your clients are following.
Ricardo, what kind of cost of goods sold would a taqueria have? Is it like the tortillas? Is it the canned beans? Is it like what are we looking at for cost of goods sold for a taqueria?
It's cash.
Oh.
Taquerias is usually cash. Is this. The purchases equals everything you purchase. That will be your frijoles, tortillas, your chicken, your meat, your ribs, everything else, your sodas, all the stuff are purchases.
So everything you purchase to make, like for example, if I sell a burrito as a taqueria, everything that goes into the burrito, right? The carne, which is the meat, the beans, the tortilla, I buy that in bulk to make the burrito. So those are the goods that the cost of the goods that I'm buying to make the product that I sell, correct?
That is correct. And usually in the food business, all of that has very, very short shelf life. So you don't have to worry really about inventories.
Okay.
They don't last long. You got to consume the meat within a day or two, and tortillas no more than a week and stuff like that. So there's, only if you buy canned foods, those can have a little shelf life. But, I don't know many good restaurants that use canned, stuff to do to prepare their meals. You have cost of labor. Cost of labor is, this doesn't apply to restaurants, so we're not going to go there. But if you were in the construction business, for example, all whatever you use to produce what you're doing, what you're constructing, labor will go here. But anyway, let me go back to
thank you.
The form. Here, we're back at the top of the form. So that 44 comes from that form that we just saw, 1125A. That gives me my gross profit of 210.53. I don't have any ordinary income coming from other states or anything that I am a part of. If I, as a partnership, was a part of another partnership, then that income would be reflected right here. I don't have a farm. I don't have, in this case, there's no 4797. What's a 4797 form? That is when you reflect the sale of an asset, an income-producing asset that you sold, and you either get a gain or a loss in the sale of it. And it's something that you probably use for the production of income that you have been depreciating. So, but again, this is beyond the scope of that. That part was actually covered yesterday by Carlos on the depreciation. He talked about that. But anyway, that will be reflected right here. Other income would be your interest income or any other things that you have. Anyway, here we go. Now we got salaries and wages, guaranteed payments. Now, you remember I told you what is the difference? Salaries and payments is what you pay employees. Guaranteed payment is what the partners take. Okay, remember that a partner can never be in payroll. Your rent is specifically item. Taxes on license are specific. Interest that you pay is specific. Depreciation on equipment. This is calculated on Form 4562, and when we get to the form, you see where these come from. And then you have other deductions, and it says attached statement. Make sure that if you do have other deductions, you do attach the statement. And one of the, a piece of advice, when your sales are, let's say, $254,000, I would not have miscellaneous deduction of $10,000 or $5,000 for that matter. Miscellaneous deductions should be limited to truly miscellaneous items that are not worth listing individually because there's just too many. In a miscellaneous item in a restaurant like this, it probably would not add more than maybe $1,000 at the most, and that's based on my experience. Now, those figures are not hard-coded on the form of the IRS. Those are based on my experience, but I leave it up to you guys to be as diligent as possible in your returns. The next part is we got the ordinary is business income or loss. This is the amount. This is the line 22 is what we're going to use to report our K1s. This section, tax and payments, these are not going to be used, almost never going to be used. You use them for publicly traded partnerships and stuff like that, but again, you probably are never going to be involved in one of those situations unless you happen to have an extremely huge business where you have hundreds of CPAs and tax attorneys working for you. At that point, you might be involved in situations like that. But for most of us, like in my case, I've never seen one. I've never done one. I'm just letting you know what is there. The next part is in Schedule B, is on page 2. It's what kind of a partnership is this? Is it a domestic general partnership or is it a domestic limited partnership? What is the difference? The difference is that a general partnership, all partners take participation in the operations of the business. A limited partnership, one or more partners do not participate in the operations of the business. So that is what the difference is. So then you have limited liability companies. And we're going to talk about those in after lunch is when we talk about LLCs. So because we use this form to report LLCs as well. Domestic limited liability partnerships, only certain states have those. Those are not very common. A foreign partnership could be that you have a partnership based on another country that are doing business in the United States. So that would be what it is. And other, well, anything else that doesn't fit here would go there. Again, based on my experience, you're only gonna use box A, B, or C. That's the primary use that you're gonna find. The next question too, do any foreign, and this is what they wanna know, IRS wants to know if you got any foreign people involved in your business, whether as a partnership, as a what do you call, I just went blank, I apologize. Ownership. Do you have any foreign owners, any companies, any specifically companies? Do you have any specific corporations or government entity that owns a part of this partnership, specifically more than 50% of the interest on the partnership? If yes, then you need to start attach a Schedule B1, and then you go in the details that, and we will see the Schedule B1 eventually. But that will be a yes. In this case, any individual owned direct or indirect 50% or more of the profits. Now, this is when an individual owns more than 50% or more of a partnership interest. If anyone is a yes, then it's yes. This particular one happens to be two individuals, and they both own 50-50. So both of them are going to be listed on the Schedule B1. At the end of the year, did the partnership now own directly or 20% or more or indirectly of the voting power of classes of stock on a foreign or domestic corporation. That means that I, as a partner, own stock in a corporation where I have the control. 20% or directly or indirectly, or 50% of the voting power. All that has to do with corporations. And tomorrow when Roberto talks about corporations, he's gonna let you know, about that, what the voting power versus ownership of stocks, etc. If this applies to a yes, then this is where you put in the name of the corporation, the taxpayer ID, the country, and the percentage of voting power. And this is for the individuals or entities that owe the 20%. That's for A and B. Number 4, this is important. Does any partnership satisfy these conditions? Now, if you satisfy these conditions, this is where you're gonna save yourself some time. But this is what it is. Number 1, your total receipts were less than $250,000. Well, I said, well, yeah. The partnership assets at the end of the year were less than $1 million. Well, yeah, okay. Are you including Schedule K-1s with your return? Yes. If you said yes to those, basically you're gonna click yes under this box, and then I'll tell you what that means. But right now, how come it says no? Do I meet all the requirements? Well, the very first question is, did I have receipt of less than 250? How much were my receipts? 254. So therefore, I don't qualify for that question. So the answer is no. What that does is that if I don't qualify for answering yes to question number 4, I have to disclose my balance sheet. That's what it amounts to. And we will get that when we get to that page. But in this case, since I don't qualify, that means that I do have to disclose my balance sheet. Is this a publicly traded partnership? No. And now, most of these questions, even though we're gonna go through all line by line, honestly, most of these questions, you're gonna find yourself that the answer is gonna be no. Very rarely will you have a yes in most of these fields here. Like during the year that the partnership had debt was canceled. You know how sometimes we have credit card debt that is canceled, that we get this 1099-C saying, well, now you've got to put that as income. Same thing applies to a partnership. Partnership can have debt that is discharged. And if that's the case, that becomes income to the partnership. So yeah, we need to know. We need to let the IRS know. Has the partnership filed or is required to form 8918 material advisor disclosure statement? That's just a disclosure statement. And again, most of the time it's not gonna apply. This is important. Number 8 is one of the important questions. That one can also send somebody knocking at your door if you leave it blank. Do you have an interest in a foreign bank account? They want to know that that the FBAR rules apply to you. That means that if you got an interest in a foreign corporation, on a foreign bank, do you have balances more than $10,000? Then you got to disclose that separately using the FBAR procedures. So in this case, you can have an account, let's say in Mexico, worth 10,000 pesos, which equals to like $20. Of course, I'm being sarcastic, but anyway, in that case, I can say yes, Mexico, but I wouldn't have to follow the rules for the FBAR. During the tax year, did you receive distributions on a grant from a foreign trust? Again, usually if a partnership receives any kind of foreign income like that, then you're also going to be saying yes to some of the other questions that we have here that we said no. Partnership election. Usually that election, the 7 is to adjust basis. 754 election is when you're going to do something to adjust the basis. And again, usually it's going to be a no. You require, this is part of the previous question. It's actually a 2-part. It's like 3-part, A, B, and C. And usually are all no's. Do you have a prior tax, number 11, Distributed any property received in like an exchange. So if you did a like an exchange, section 1035, you would say, you would click the box. If you redistribute any kind of property to your partners, we're gonna mark yes. When you distribute cash, that's usually no. They're talking about. I'm sorry. Oh, I'm sorry. I heard some noise in the back. I thought I was asking a question. Okay, is required to form 8858. That's information return with respect to foreign disregarded entities. Again, if we have foreign entities that own a part of this partnership, if we're involved with them, we need to let them know. Anything that has to do with foreigners, they want to know. They want to make sure that we're not hiding income, for terrorists and stuff like that. So that's the purpose of most of these questions. Do you have any payments that you will require 1099? Like, do you have in the restaurant business? Do you have any 1099 employees? On a restaurant, usually is no. Most of the people, you're gonna find a lot of them. They're gonna say, "Well, I pay them. They're responsible for their own taxes." Is that right? No, it's not. If they're your employees, they are employees. They're not contractors. This is for contractors. Now, in the industry of construction, for example, this is very common. So you would say yes. And if you say yes here, you really need to have a yes here too. What does that mean? I'm telling you, yeah, I do have people that I give them 1099s, and yes, I gave them to the IRS. That's what you're saying. You're reporting them to both entities. Corporations 5471 information return. That's about foreign companies. If you are a foreign corporation that is involved in your partnership, most of the time it's not going to apply to you. Number of the partners that you have this form about, it's also related, doesn't apply. And then 1042S requirements. Question 19 refers to if you pay somebody outside, any non-resident aliens, for example, that live in Mexico for something that they did for you. Let's say that you hired an advertising specialist from Mexico to come up with your stuff, and they never touch the United States. You pay them, but you are required to withhold certain money, and you report that on Form 1042S. That will be the only time this would happen. And again, this is not a common situation, but it happens from time to time. If you're a specified domestic partnership, 8938 for the tax years. 8938 is used for foreign financial assets. Do you have any foreign financial assets that the company owns? They want to know whether you need, if you do, you need to disclose them. That's all there is. It's a disclosure. There's nothing to be taxed on top about. Let me see what other important here that we have. 24. Question 24 is very important. Does the partnership satisfy one of the following? This is actually a fairly new question. It wasn't there before a few years back. And if you satisfy any one of these, you gotta say yes. Number one, do you have any pass-through entity with current or prior year excess business interest expense? Now, again, that one usually is not gonna apply to any of your clients. Now, the B might apply, especially in California, because if you may have a very successful business that doesn't quite hit the $10 million limit, but you may have, 20, let's say 9 million worth of sales 3 years in a row. If you have 3 years in a row, an aggregate of $26 million of receipts, then that's gonna be a yes. That's an automatic. And what does that mean? That means that you got more work for you, more kaching, like my Frank Pasquale like to say, and you have more, more forms to complete. But we're not gonna go into detail. I'm not gonna fill into that form, just so you understand what it is. If the partnership is electing if you are electing not to be treated and here, then you gotta file a field form B2 and be, you know, in part 3 of line 3 of B2. Again, most people are not gonna go there. It's gonna be always a no. Then we got a designation of partner representative. When you have 2 or more individuals, one of them has to answer to Uncle Sam, at least for contact anyways, not necessarily to answer. It's not that he's gonna be responsible, but he's going to be the one that the IRS can contact for any questions on the partnership. It doesn't have to be an auditor. It could be a simple question as you forgot about something, or is this address correct? I notice that the address has a zip code with 7 digits instead of 5. You know, something ridiculous like that. Let me see here. Then we go into the Schedule 1 and the Schedule K. Now, Schedule K is pretty much how we're gonna summarize what is gonna get reported into the K1s.